Hey, it's Darius. And once you start using I-75 CPA Review, you're going to be looking forward to score release day as much as I do. So congratulations to all those I-75ers who recently passed the CPA exam. If you didn't pass, don't get mad. You might just need to get on a better road. So get yourself on I-75 because the right teacher makes all the difference. All right, what do we have to know about management discussion and analysis, better known as MD&A? So the MD&A section of the annual report offers a narrative explanation of the financial statements and provides insights into management's perspective on the company's financial performance that just ended. Also providing insights into management's perspective on the company's financial condition and its future prospects. MD&A provides auditors with additional qualitative information about the company's liquidity, capital resources, and future outlook from the perspective of management. So the exam will often ask what's included in MD&A and what isn't. What's included is management's views on financial performance. MD&A provides a narrative insight into why certain financial results were just achieved. For example, management might explain the causes of significant increases or significant decreases in revenues or in expenses. Also included in MD&A are risk factors and uncertainties, where management will discuss known trends, events, or uncertainties that might affect the company's financial condition or future results. And these risks can include market conditions, regulatory changes, or other external factors. Also included in MD&A, forward-looking information like forecasts and projections, forward-looking statements regarding expected future performance, future plans, potential challenges in the future. For auditors, understanding management's assessment of the company's performance and future outlook helps to provide context to the financial data. And that's sometimes the right answer to a multiple choice question on MD&A. The idea that MD&A is qualitative information that helps provide context to quantitative financial data. All right, which of the following is not typically covered in the MD&A section of a company's financial report? A says a discussion of liquidity and capital resources. That'll be in the MD&A. B, a breakdown of audit procedures performed by the external auditors. Yeah, don't look for that. Specific audit procedures used by the auditor will not be included in management's discussion and analysis. C, an analysis of the results of operations. That'll be included in MD&A. D, a discussion of potential risks and uncertainties. We said that's included in MD&A. So the answer is B. MD&A does not include details about audit procedures performed by external auditors because MD&A is prepared by management to discuss the company's financial performance, risks, and outlook, not the specifics of the audit process. C is wrong. MD&A includes an analysis of the company's results of operations where management explains the factors that impacted financial performance, including revenues and expense trends. And D is wrong. MD&A often includes a discussion of potential risks and uncertainties that may affect the company's financial performance and condition in the future. Management highlights factors that could impact the company's outlook and results as part of MD&A. So this question asks which of the following is not typically covered in MD&A, and the answer is B, a breakdown of audit procedures performed by external auditors. Now, for an issuer, the MD&A section precedes the 10K annual report, and the information contained in MD&A will not appear in any footnote. MD&A is a required disclosure by the SEC for all publicly traded companies in their annual report. You've got to know, though, that MD&A is not considered a footnote. The exam loves to tease you with that. MD&A is a required disclosure for a public company, but it's not a footnote to the financial statements. MD&A is not audited directly, but the auditor reads the MD&A section to ensure that it aligns with the financial statements and that no material inconsistencies exist between what's in the MD&A and what's in the financial statements. If the auditor does find inconsistencies between how management describes what happened in the MD&A and how the financial statements describe what happened, then the auditor goes back to management and asks for clarification. So we know that MD&A is required for an issuer. What about for a non-issuer? MD&A is only required for an issuer of securities, according to the SEC. Government accounting also requires MD&A, but if you're a privately held entity, not publicly traded, and you're not a government entity, just a mom and pop business, do you have to have MD&A? No. All right, for an issuer, which of the following best describes the MD&A section of a company's annual report? A says it's a section that provides audited financial data. No. B, it's an opinion by management on the fairness of financial statements. No. C, it's a required part of the footnotes to the financial statements. No. MD&A is not a footnote to the financial statements. So the answer is D, none of these. MD&A is a section that provides management's qualitative discussion on things like financial performance, liquidity, and risk factors. A is wrong because MD&A provides management's discussion and analysis, not audited financial data. B is wrong because the MD&A does not contain an opinion on the fairness of the financial statements. Remember, MD&A is not audited, so it wouldn't contain an opinion. And C is wrong because MD&A is not part of the footnotes. It's a separate section of the annual report that complements the financial statements, provides context, but it is not considered a footnote or included in the notes. How about this one? Which of the following is the primary responsibility of auditors concerning the MD&A section of an issuer's annual report? A says to audit the MD&A for accuracy and provide an opinion. No. B, to verify that the MD&A complies with GAAP? No. C, to assess the consistency of the MD&A with the audited financial statements? Yeah, that sounds pretty good. D, to issue a separate audit report on the MD&A? No. C is correct. Auditors are responsible for assessing whether MD&A is consistent with the audited financial statements. Auditors read and review the MD&A to ensure that there are no material inconsistencies between the narrative provided by management and the financial data reported in the audited financial statements. And here where I say the word review, I don't mean they perform a review engagement on MD&A. They read it and they review it just to make sure that it's consistent. A is wrong. To audit MD&A for accuracy and provide an opinion, we said auditors do not audit MD&A. The MD&A is not subject to the same level of audit scrutiny as the financial statements. Instead, auditors focus on ensuring consistency between MD&A and the audited financial statements. Remember, MD&A is just management's narrative explanations verbally as to how they feel about what just happened. It's qualitative information. It's purely qualitative, so it's not something you're going to audit. And B is wrong. To verify the MD&A complies with GAAP, once again, it's qualitative information. GAAP is full of quantitative rules. Auditors do not verify compliance with GAAP with regard to MD&A. Their focus is on consistency with the audited financial statements. And D is wrong. Auditors do not issue a separate audit report on MD&A. While they read and review the MD&A for consistency, they do not provide a formal audit opinion or separate report on MD&A. So this question asked which of the following is the primary responsibility of auditors concerning the MD&A section, and the answer is C, to assess the consistency of MD&A with the audited financial statements. Let's do this one. The MD&A section of an issuer's annual report typically discusses which of the following areas? A, internal controls over financial reporting. No. B, the company's liquidity, capital resources, and results of operations. Yeah, that looks good. C, specific audit adjustments made during the financial statement audit. No, that won't be an MD&A. D, the auditor's opinion on the company's financial performance. No. Letter B is correct. MD&A typically provides a discussion of the company's liquidity, capital resources, and results of operations. It gives management's perspective on the financial performance and key factors that may have influenced the results according to management. A is wrong. The MD&A does not typically focus on internal controls over financial reporting. Internal controls may be discussed in other sections of the annual report, such as the auditor's report or in management's report on internal controls. But internal control over financial reporting is not a primary focus of MD&A because MD&A is more focused on financial performance, liquidity, and capital resources. C is wrong. Specific audit adjustments made during the financial statement audit. MD&A does not provide details on that. Information on audit adjustments may be found in the auditor's report or in discussions between auditor and management, but MD&A, we said, focuses on management's perspective on financial performance rather than audit procedures. And D is wrong. The auditor's opinion on the financial statements, that's presented in the auditor's report, not in MD&A. MD&A represents management's discussion of the company's performance, not the auditor's evaluation or opinion. So this question asked, the MD&A section of an issuer's annual report typically discusses which of the following areas? And we said the answer is the company's liquidity, capital resources, and results of operations. How about this? What is the significance of the MD&A section of an issuer's annual report in relation to the financial statement audit? And if you think you know, leave me the answer in the comments section. And remember to like and subscribe and hit that notification button so you'll find out every time there's a new video. And if you need more help with MD&A or any part of the CPA Audit Exam, get yourself on I-75 with me, Darius Clark, because the right teacher makes all the difference. So go to i75cpareview.com and get on the right road before prices increase. If you sign up for a monthly subscription before September 1st, you will not be impacted by any price increase. Hey, it's Darius, and so much effort and energy go into each I-75 video. But it's all worthwhile when you pass and notice the I-75 difference. Congratulations to everyone who passed the exam in 2024. Get yourself on I-75 because the right teacher makes all the difference. Another incredible score release here at I-75 CPA Review. So congratulations to Kevin for passing FAR, and what a nice score there, an 88. And to all the I-75ers who let me know that they passed in April and May.